Good morning and welcome to Our Chicago. I'm Tanya Babich. Earlier in the pandemic, we saw a housing market boom, and now we're tracking slower home sales and rising mortgage rates, and that's pushing potential buyers out of the market because it's becoming too expensive. So how can people best navigate the real estate market in the Chicago area right now? Professor Andrew Hansen joins us this morning. He's from the Stewart Handler Department of Real Estate at the University of Illinois at Chicago. Good morning.
Good morning.
Professor Hansen, how are home prices trending right now in our area?
In Chicago right now, the median sales price is right around $320,000. That's up about 3% from the previous month, but over the previous year, it's up more like 9%. So they're still trending up, and right now they're trending up a little bit more than the United States as a whole, month over month.
Why is that?
Well, Chicago is usually a little bit more steady than most markets. So I think right now you're seeing Chicago kind of catch the tail end of nationally price increases slowing down. So we're just a little bit slower than most places. So we are, I think, squeezing out the last of the price increases in the market is what I would say.
And that's really hard to stomach as mortgage rates are going up. If you say that we're at the tail end of this nationwide trend toward a cooling off of the market, when do you expect that things might start to reverse themselves, that prices might start to go down a little bit?
Well, I would say there's some signs that are pointing to the market's cooling. So right now, in Chicago, the price increase from the previous year was 15% as opposed to 9% this year. So prices are still rising, but they're rising at a slower rate. Okay. Inventory is up a little bit month over month in Chicago. New listings are up a little bit month over month in Chicago, but they're still way down over the previous year. So I would say we're starting to change the pace of things, but I don't think there's signs that things are cooling, but there's also some signs that things are not all the way cool or going to tip in terms of price declines. You mentioned mortgage rates. Mortgage rates have been rising pretty rapidly since January, and that should put downward pressure on home prices if you think about keeping a monthly payment constant.
How high do you expect mortgage rates are going to go?
I don't have an exact prediction for you on that. I definitely expect them to keep rising, given that we see the Fed tightening money supply to combat inflation, and that those policies will flow through to credit markets and mortgage rates. So I do expect them to rise, and that would put downward pressure on home prices.
So this is for people who are in the market to buy. What about those who are in the market to sell? What advice do you have for those people?
Well, the market to sell right now, I think I would still describe the market we have in Chicago as a seller's market. I think if you're a seller, one thing to think about is, are you a seller and someone who's going to have another new mortgage? So are you moving from a really low rate mortgage to a mortgage that's going to be, from 3% to 5.5%, which rates are today on a 30-year fixed? You may want to think about that a little bit. If you're a homeowner who's selling and you're going to have that cash and not need a mortgage, that's a little bit different situation then. But in terms of what prices look like, it's definitely still, and what inventories look like, it's definitely still a seller's market.
How then do buyers navigate this market?
Well, I think, for buyers, there's a couple of things that I would recommend. Certainly on the mortgage side, if you look at rates, I know that they've been up, and I said they've been coming up a lot since January. That's true. They're still historically quite low if you look back, over the last 40 years or so like that. And with inflation, the real interest rate right now is negative. So if you're paying off a mortgage and the rate is 5.5%, but inflation is close to 10%, you're actually in real terms ahead on that. That's a negative real rate. And if home prices are generally rising, that still makes a pretty good investment. I would still suggest buyers shop around for their mortgage. There are websites that aggregate from lenders that you can shop for the lowest rate. That is definitely going to save you some money. Rates aren't set across lenders, and buyers should be comparing what's called the APR, or annual percentage rate, on their mortgage. That accounts for all the fees that are involved in the mortgage, not just the advertised interest rate. Avoiding things like prepayment penalties and balloon payments that could be part of a mortgage are also a good idea.
Great advice there. Professor Hanson, that's all the time we have right now. Thanks so much for your insight. You know, it's been a wild time for renters as well, with rising costs and even bidding wars. We're going to come back with how to navigate the rental market after a short break. Hey, if you like that video, be sure to subscribe to our ABC7 Chicago YouTube channel.